Good afternoon, everybody. Bit of a late stream. I did post my ideas on my Telegram, which should be on the screen now. And I had an original set idea. 1 minute, we'd taken out London high, traded below these lows, displaced in doing so. And I wanted to trade off of this stop loss above here, targeting the lows below. That hit stop loss. And I have the re-entry idea, which was we got in over here the first time, price went up, took us out, then traded below this swing low, and it came up to this optimal trade entry where we got in at. Now, the only way this goes down is if we've got the daily bias correct, and we are bearish for why? For a couple of reasons. One, we've come up to this daily order block, which is, of course, going to be institutional order flow on a daily time frame, which is going to be, generally speaking, strong. We've also traded below this low right here after the touch of the order block. So we had this order block, touched it, came down, traded below this swing low, right, in this day, and we come back up into this area. So I've had a bearish bias for a while. Obviously, it's generally speaking scary trading against the kind of bullish upwards momentum, but that is the point of the strategy. And our current entry, based on the 1 minute time frame, is this displacement here, taking out this swing low, a pullback into optimal trade entry, and we're just selling off from that pullback. And we're targeting the daily low, which will probably be either down here or down here, taking potentially some of the profits out here, which is a 1 to 8 if it reaches the ultimate target, 1 to 7, and then a 1 to 5 if it reaches down here. So that's my strategy or trade for the day. I don't think I'm going to enter any other trades anymore. We've taken a couple of GU sells and we've not been correct on when it's going down. So we've been a bit more passive today, but when my strategy gets ticked off, I have to enter. Now, Brody Loves Footy says, yo, what's up, my guy? I like your name, by the way. Do you watch football? I'm assuming that's why you put your name like that. But yeah, I am targeting the lows down here. The New York Kill Zone, which is I think it's the low of the day. So the low of the day is right here, which would be, okay, it would be this peak right here. And then the New York Kill Zone low is near the low of the day. So that would be the idea for us and why we entered this sell. I mean, the only way I would say it, there's no reason to reduce the stop loss. If it hits stop loss, that's it, we're out, we're done. But the liquidity sweep for reference would be the London Kill Zone right here. I like to mark it with a box, and it'll be an orange box. Now that's just what retail sees as support. They see this area as support. Why? Because there's equal highs. Most importantly, it's a relevant high, right? And because it's equal highs and it's a relevant high, I believe that this move upwards is a liquidity sweep. Institutions will be seeing traders entering a sell like this, and guess where they put their stop loss? They put it over here. So when they enter their sells, like here, especially when price did this large move, when price came back up to it, why would they not want to sell that? Lo and behold, we swept the highs, displaced downwards on the smaller time frame, and we got in on that pullback, and that's why we are selling. So I didn't draw everything at once, but this is what's going on in my mind. And the idea that I've been implementing recently is turning a retail idea into what institutions will be looking at. And once you get the perspective of smart money, which is institutions, hedge funds, etc., you can then get a bigger picture on where they will move soon. So it's almost like I'm the institution before the institution actually makes their hand or plays their hand. And the way that helps is in preparing to enter a trade. So I saw this before it happened. So when the price now swept these highs, I was on high alert, waiting for my entry model to fall into place. Now, obviously, I'm not always gonna be right, and it is a new strategy in a way we're learning. So we were told 6 months of practice on the demo account. I'm using a live account personally. I prefer learning on the live account, even if it's not as much money as I would normally use. I prefer live to demo, but it's a smaller amount than I would normally invest. That being said, 6 months is currently 100 days where we started learning. I'd say we finished learning around 50 days in. So 6 months is 360, is 180 days. So by 230, day 230, so we have 120 more days of practice to really get this idea or trading idea cemented. I think I'm pretty good. The main thing I've had issues with recently is two things. One has been a reoccurring issue, which is the daily bias. I've struggled with that severely. And then number two is, which is a bit more recently, is patience. Sometimes I'm not really using the correct equal highs, or I'm not using the correct swing high. I'm not reading the market accurately in terms of price action, and especially market structure. That's the main place, because I've been looking at some, for example, this is an intermediate term high in my opinion, and because I saw it as intermediate term high, I'm thinking price shouldn't go above it. But then I'm also thinking liquidity needs, if there's a liquidity sweep, we need to go above it. So there's a contradicting kind of ideology I had there. So that was a bit confusing, because if you had this as an intermediate term high, price shouldn't go above it, which was what funded the idea here. We had swept, I think we'd come above, I wish I had a wider image screenshot, but I believe we come above the London session high, and we swept it, slightly displaced it downwards, and we're going down. We did trade, I remember now, we traded above the intermediate term high, but we didn't close above it. So that was my reasoning as to why this was okay. That, yeah, sure, we didn't close above the intermediate term high, but we traded above it. But obviously now we've closed above it, so yes, no longer valid. And yeah, I think that's the main thing. Now, it is the silver bullet window, and the silver bullet window is the idea that this specific time frame, or time window rather, price will look for buy side liquidity if you're bearish, to then move to the downside after a displacement and a retracement that funds your entry. So in theory, it would be an expectation of this to happen during this window, right? That red line is kind of what you're looking for. But I got in a little bit earlier. Now, reasoning because I believe that move kind of happened here. So there is a bit of concern in the fact that what happens if price goes up then goes down. Well, I've just accepted the risk of the trade itself. That's how I've mitigated it for now. And yeah, we just go wait. Targeting the daily low. I think it could potentially go further than that, but it would have to distribute very soon, because time wise it's already 3 p.m. or rather 10 a.m. New York session. So might be an afternoon delivery low key, but we'll see. Anyway, that was all I wanted to show you. Just letting it play out a little bit so you can see if, for the most part, we're correct. Obviously, I don't know yet. And no matter how long until it hits stop loss or take profit, you'll never know if I'm profitable or not until it hits either stop loss or take profit. So I could end the stream early, because this is literally all I wanted to show. What I was planning to do was open or start trading from 10 a.m. New York time or 3 p.m. GMT, and then look for the silver bullet window. But we got the signal to sell earlier than the actual time frame that we were meant to be looking for that move to happen. So we had it a little bit earlier. So that's why I just streamed. I took it off streaming and just streaming me looking at it. Another thing I tend to do when I'm into a trade is overanalyze. Like, I keep analyzing as price keeps making new moves, which is fine to an extent. But I think sometimes you got to be careful, because there's a reasoning as to why you got into a trade. Like, I got in based on the daily bias I've had for the whole week. I've got in because of the price action I saw in a small time from my entry model, etc. But me now hyper analyzing every single candlestick, I have to weigh the fact that my analysis is probably better in terms of strength than it is me looking at price in the past 1 minute. So I have to trust my strategy, my entry, etc. more than I do what prices seems to be saying, because there's a lot of noise in these smaller time frames. So yeah, as you can see, price is going up towards my entry, but I'm not really that phased, to be honest. Yeah, we'll see what happens. Also yesterday, so upset I didn't manage to watch the game, but my oh my, the Argentina game. If I need to rewatch it, Loki, so I can see it from the beginning. I only caught the second half. No, I wasn't able to watch it properly because I was traveling. Okay, so far it's not looking good, but it's possible we retest this area. Don't forget, this is the 5-minute bullet window, so it could very much sweep our stop loss and go back down again. And also, I'm assuming that I've got the direction correct. I might have got that wrong because it's in DXY. We've hit this order block here, which could be funding the ideas for it to drop lower. But like I said, I've been bearish for a reason. I'm gonna just trust it, and then we can analyze that another time. Excuse me. Yeah, it looks cooked. I'm gonna keep it a buck. So normally, I would have closed the stream markets. I wouldn't be looking at this because this doesn't really seem that helpful. So, but on this occasion, because I haven't streamed as much, we can watch it together. Just show you how I'm dealing with the ideas mentally, etc. Not bad. It's just chilling right now still. Institutions need to step in. Okay, well, now you guys can see why patience is key. You gotta trust the strategy. Now, most people will not have been able to re-enter. As you can see, we entered in here on this pullback, took us out, made the move, created the move again, pulled back, we entered, currently created a lower low here. And yeah, like I said, normally I don't watch this because what is the benefit? Unless I'm actively concerned with the idea that, okay, maybe I was wrong. But again, when you have the daily bias, you just gotta wait for something that's key. Look for where retail will see a support, wait for the sweep, wait for displacement, get in on a retracement, and then that's your key to enter. So this is 1 to 8. I'll set an alert near where I want to be coming out, and then I'll reanalyze then. So for now, that's it. We're done. Now, obviously, depending on your account size, if you have, let's say you risked 1% of £1,000,000, that's 10K, 10,000. Let's assume it hits take profit. That's about 80,000. That's 80,000 for the day or the week. There you go. You just earn a yearly salary, a very good yearly salary in a day, in a week. But then there's a big but. You need £1,000,000 to do so, and of course, a sensible risk or risk management. If you had a funded account of 100,000 or 1,000,000, and you were able to have 100,000, you probably risk 10K a trade. No, if you had, how does it work again? Yeah, so if they give you, you risk one. Okay, yeah, no, I was wrong. But yeah, anyway, that's it for today. I will catch you guys tomorrow. I don't think I'll be live streaming again today, but I'll give you an update on this trade on my Telegram. I was just waiting for it to create a low or trade below this low. It did. Not to say it's going to go here now, but just for the sake of not just sitting down here watching a chart and not adding any value. I wanted to wait for that to happen so you guys can see me, manage my emotions, etc. But yeah, that's been it for today. I'll catch you guys tomorrow. It's been your boy CJ IC, and peace. Take care, everybody.